China's crude oil imports from Russia soared 55% from a year earlier. The world's second biggest economy imported around 8.42 million tons of oil from Russia last month. The import is equivalent to roughly 1.98 million barrels per day, which is up a quarter from 1.59 million barrels per day.
The world's biggest oil supplier has beaten Russia now to keep its ranking as China's top crude oil supplier this year, while Saudi Arabia holds the position as biggest supplier to China for second consecutive month this year, when Russian oil trade to China was down 9% amid Western sanctions.
China's monthly crude oil imports surged to third highest on record. Implications for the global oil market. China, as the world's largest crude oil importer, experienced a significant surge in its monthly crude oil imports in May, reaching the third highest level on record. This surge comes at a time when concerns over the country's economic data have been looming, impacting oil market sentiment. The increase in crude oil imports highlights China's crucial role in shaping global oil demand and prices. Official data from the General Administration of Customs revealed that China's crude oil imports averaged 12.11 million barrels per day in May, marking a substantial 17.4% increase compared to the previous month imports of 10.32 million barrels per day. Moreover, this figure represented a 12.2% rise compared to May 2022, when imports averaged 2% rise compared to May 2022, when imports averaged 10.79 million barrels per day. The surge in crude oil imports can be attributed to multiple factors. Firstly, Chinese refiners returned from maintenance activities during May, leading to increased import volumes. Additionally, refiners sought to build up their stockpiles, taking advantage of favorable market conditions and ensuring a steady supply of crude oil. The building of crude inventories has played a crucial role in supporting China's crude oil imports and maintaining demand, despite concerns arising from mixed macroeconomic data. While recent economic data from China has raised concerns within the market, potentially resulting in lower demand for crude oil and other commodities, the recovery in oil imports has provided some relief. Analysts have been closely monitoring the Chinese economy, as weaker than expected economic data could have wider implications for global oil demand growth. Some experts argue that the weaker economic data might eventually translate into lower commodity exports in the coming months, as imports tend to lag behind purchases. The question of whether estimates for China's oil demand growth this year have been overly optimistic remains a significant concern for the market and analysts. Despite underwhelming economic data that have dampened oil market sentiment in recent weeks, no significant downward revisions to forecasts for China's oil demand growth have been made thus far. China's oil demand growth is of utmost importance, considering its impact on global oil prices. Even if OPEC Plus manages to exert upward pressure on prices, China remains a primary concern. Faith Baral, the executive director of the International Energy Agency, emphasized that China's economy and oil demand will be the most influential factors driving oil prices this year. He pointed out that uncertainties persist in the oil market, with China being the most critical one. China's monthly crude oil imports reaching the third highest level on record in May signifies a robust recovery in demand. Despite concerns over the country's economic data, the growth in oil imports has provided some reassurance to the oil market. However, uncertainties surrounding China's oil demand growth for the remainder of the year remain. As the world's largest crude oil importer, China's position holds substantial influence over global oil prices. Any fluctuations in its demand can send ripples throughout the market, affecting oil-producing nations and investors alike. Consequently, analysts and industry observers will continue to closely monitor China's economic performance and oil demand, navigating the complexities of the global oil market. Moving forward, the trajectory of China's oil imports and its economic data will continue to shape the global oil market. While the surge in May's crude oil imports provides temporary relief, uncertainties persist, warranting cautious analysis. China's economic growth has been a key driver of global oil demand in recent years. As the country's industrial sector expands and its middle class continues to grow, energy consumption, including crude oil imports, is expected to rise. However, recent economic indicators, such as slowing manufacturing activity and increased debt levels, have raised concerns about the sustainability of China's growth trajectory. The ongoing trade tensions between China and the United States have also introduced additional uncertainties. Trade disputes and tariffs can impact the flow of goods and commodities, potentially influencing China's oil import patterns. Any slowdown in economic activity due to trade frictions could have a significant impact on China's oil demand growth. Furthermore, China's commitment to reducing carbon emissions and transitioning to cleaner energy sources may influence its long-term oil demand. The Chinese government has been implementing policies to promote renewable energy and electric vehicles, aiming to reduce its reliance on fossil fuels. While this transition is expected to be gradual, it could ultimately impact China's crude oil import volumes in the future. In the context of the global oil market, China's oil demand growth remains a crucial factor for oil-producing countries and market participants. Oil-producing nations heavily rely on China as a major market for their exports, and any fluctuations in Chinese oil demand can significantly impact global oil prices. Moreover, investors and traders closely monitor China's economic data to anticipate shifts in oil demand, making informed decisions about production, supply, and pricing. In conclusion, China's monthly crude oil imports surging to the third highest level on record in May reflects a strong recovery in demand, driven by refinery maintenance completion and stockpiling efforts. Despite concerns surrounding China's economic data and the potential for slower oil demand growth, no significant downward revisions to forecasts have been made thus far. However, uncertainties persist, including trade tensions, environmental policies, and the sustainability of China's economic growth. Going forward, analysts and industry observers will closely monitor China's economic performance, oil import patterns, and policy developments to navigate the dynamic landscape of the global oil market. Thanks for watching our video. We hope you found it helpful and informative. If you found this video helpful, please give it a thumbs up and consider subscribing to our channel for more content like this. And don't forget to hit the notification bell to be notified when we upload new videos. Thanks again for watching, and we'll see you in the next one.